AIG, who got $80 billion during the Great Recession with the TARP funds, that's when we knew what they were doing. Now there is no oversight. So who the fuck knows what they're going to do with the $4.5 trillion? They're talking about giving them another 4 or 5, 16, 60 trillion more dollars with the coronavirus bill number 4. So AIG is the American International Group. So it's not the USA anymore, it's AIG. These secretly, privately owned banking cabals are very, very secretive. All of them. Bank of America Corporation, J.P. Morgan Chase and company have already halted share buybacks. So don't worry, America. They're not going to cheat investors, drop their stock real low, and then just buy it real. Wells Fargo said that they're going to continue to pay out their fat dividends to their stockholders. And Donald Trump seriously considered nominating Herman Cain to be a member of the Federal Board of Governors, the Fed, the board, right? If the American people only understood the rank and justice of our money and banking system, there would be a revolution before morning. Andrew Jackson. So this is the political structure of the Federal Reserve System, a.k.a. the Fed. So 38% of the 8,000 plus American banks are part of the Fed system. 38% of 8,000. So that's, 3,000, almost 4,000. They're all, that's 38%, right? So it's 2 out of 5. 2 out of 5 banks are part of the Fed system. If you're a national bank, you have to be part of the Fed. Now, the Fed is run by the Board of Governors, but there's 3 main entities. And I want to focus on the Board of Governors, but I also want to focus on the Dirty Dozen, the 12 regional Federal Reserve banks scattered across America, and the Federal Open Market Committee. The Federal Open Market Committee controls the monetary policy, and they're made up of the same people, the Federal Reserve Board of Governors. All of the members of the Federal Board of Governors serve on the FOMC, but also 5 of the regional banks. So you have the Federal Board of Governors, you got the Federal Open Market Committee, and then you got the 12 Dirty Dozen, 12 member banks. Now there's a total of 7 member seats on the Board of Governors. Typically, the Fed Board, the Board of Governors, have 7 members. And they're all, they serve for 14-year terms. So all 7 members, if you're a member, you have a 14-year term. If you're the chairman or the vice chairman, however, you're appointed to those positions for 4-year terms. And then, of course, all the members of the Board of Governors are nominated by the President and confirmed by the Senate. So the Federal Open Market Committee, I'll go into detail more on it later, but they comprise of the 5 regional federal banks presidents of the Dirty Dozen, and then typically 7 of the Federal Board of Governors, which gives the Fed Board the majority, but there's only 5. There's 2 vacant seats. There's 2 vacant seats right now. So Donald nominated 2, but Mitch is dragging his feet. So you have 5 members on the federal board. And then you have 5 regional bank presidents. This means that the 5 regional bank presidents are just as powerful as Jerome Powell and the other 4 Federal Board of Governors the Board of Governors, governors? Whatever you want to call them. The 4 Federal Board of Governors members, the governors. So you got 7 governors. Let's just go with that. 7 governors, and then you got the chair, Jerome Powell. And then the Federal Reserve doesn't serve the American people. It serves the banks and the U.S. Treasury. They're the bankers' bank, but not the people's bank. So currently, April 2020, there's only 5 members of the 7-member board, 2 vacancies. And so that means it only takes a majority vote of 3 to pass some policy. 3 of 5 individuals Only 3 individuals control the monetary policy and the entire money supply in our entire central bank. And then 3 of the 5 Fed, the Board of Governors, are Donald Trump appointees. So Michelle Bowman, Richard Clarida, Randall Quarles. So Michelle Bowman, they all have 14-year terms, and oddly enough, most Fed governors resign. Most of the people that are appointed to the Fed end up resigning, hence the 2 vacancies. The other 2 Fed governors are Jerome Powell, the chair, and Lael Brainerd, and they both are Obama appointees. So Lael Brainerd and Jerome Powell, appointed by Obama, Michelle Bowman, Richard Clarida, and Randall Quarles, nominated by Donald. Donald said he's going to nominate Christopher Waller and Judy Shelton. That was July 2nd, 2019, nearly a year ago, which seems so very, very long. That was before the impeachment. What's taking him so long? Why is Mitch McConnell taking so long to confirm these appointments? It would seem like it'd be pretty simple, right? The president nominates, and then the Senate, confirms. So that's all it takes. They're friends. It seems like it would just be 1-2 punch, done. The Federal Reserve is down 2 members. Only 5 members of the very, very elite federal board. 2 seats are vacant. So all it takes would be a Mitch McConnell confirmation. So anyways, we only got 5 people that's running the federal board. Now, individual treasuries are used to price key financial products that everyday Americans use. The 10-year bond is the underlying basis for the 30-year fixed-rate mortgage. The 3-month note is used to price CDs, certificate of deposits, and money market accounts. Jerome Powell, a Catholic Republican, is the Fed chair. He's worth $55 million, and he owns millions of dollars worth of stocks. Therefore, it's a major conflict of interest. He owns stocks. He's going to protect his stocks in the stock market. Not the, poor, homeless worker class. Not the American people, but his precious stocks. $55 million, he's going to, represent the millionaire class. The San Francisco Federal Bank president, Federal Reserve Bank of the Dirty Dozen, is Mary Daly, who makes $476,000 per year. The St. Louis Federal Bank president, James Board, makes $370,000 per year. And the federal board sets those salaries. So Jerome Powell, he once took a job and only took $1 pay per year because he's so fucking rich he doesn't need money anymore. He's worth $55 million. And he makes $204,000, which is half the amount of the San Francisco, less than half of the San Francisco president, Mary Daly. And the other members of the Fed make $183,000 per year. So 38% of the 8,000 banks are part of the Fed. That's some 3,000 or 4,000. That's a lot of banks. And the Federal Reserve, they make billions of dollars on their own. The dollar bill says Federal Reserve note on it. The Fed turns virtually its entire bottom line over to the U.S. Treasury, but the Fed gets paid by the U.S. Treasury. So the Fed gets, the Fed gives all the money to the U.S. Treasury, and then the Treasury turns and gives the Fed their $1 trillion cut. So the U.S. Treasury prints up the money, hands it to the Fed passes it around, and then the Fed, all the profits that they make through interest and whatever, they take all that profit and they give the entire check to the U.S. Treasury, and then the U.S. Treasury turns around and doles out the checks. The Federal Reserve makes billions of dollars off the interest it earns on all those government securities and treasuries it purchases through their Federal Open Market Committee, the FOMC. The Fed makes money from investments in foreign currencies. So we own foreign currencies. We make money off of that somehow. We also make money from the interest on loans provided to depository institutions and with the fees received in exchange for services provided to depository institutions, such as check clearing, transferring of funds, and automated clearinghouse operations. Apparently, the Fed doesn't get any funding from the congressional budget. It's from the U.S. Treasury. The Fed can buy and sell treasuries and securities and other financial instruments. The Fed can buy and sell securities and treasuries and other financial instruments. They are both government and private. Private when they don't want to be held to account, public when they want our money. The Federal Reserve pays for those securities by crediting funds to the reserves that banks hold in accounts at the Fed. That influences how much banks lend out. That determines the volume of demand bank deposits that are held by the public. The Federal Reserve doesn't print the money. The U.S. Treasury does, the Department of Engraving, Bureau of Engraving. And then it's a private company that prints it, I think somewhere in New Hampshire. But the Federal Reserve takes the money. So yeah, the U.S. Treasury prints it up, but it takes the trillions of dollars, and they're the ones that distribute it. It's got Federal Reserve is written on the dollar bill. So the U.S. Treasury is printing it on behalf of the Fed because that's what Congress passed. The Federal Reserve also takes out old and torn dollar bills out of circulation too. So they're printing money up the way, not quantitative easing, it should be a slow trickle to, keep up with population and wages and prices and whatnot. It shouldn't be also to make sure the old and torn dollar bills are taken out of circulation. So it should be, just like Milton Friedman said, the monetary policy of America should be a slow dribble. There shouldn't be no quantitative easing. The Federal Reserve there are some audits. They report to Congress on economic and monetary developments. Not exactly an audit. Board of Governors is audited, however, by an outside group that the Office of the Inspector General funds. The Inspector General also conducts its own audits into the Fed. So, the Inspector General, this, a branch of the government. I think I've heard that, Ron Paul says that you can't, audit the Fed. We need to audit the Fed. So I think they're saying Congress has never audited the Fed, even though there's a lot of independent audits. And then the resulting reports are published on the Federal Reserve's website every year. The $6 trillion stimulus helped the stock market for about an hour. They're back to being volatile again. We're in a great recession at the very least. Harry Dent is saying this is the big one. This is the Great Depression, which is, the Kung Flu's kicking the shit out of us and our economy. The ECB is using quantitative easing now. Eurozone banks, Canada, the Bank of England, Britain, all are putting up money, just like America, deploying stimulus. The Bank of Japan is signaling it's ready to start quantitative easing too. How can we solve our money, just like the Weimar Republic in Germany, just like they're accused in Venezuela. This is inflation. Printing up more money devalues the dollar, gives it less purchasing power. Printing up more money, expanding the money supply, makes each dollar less worth less because it's not as special. The Federal Reserve is buying more short-term U.S. securities to help us Americans out somehow. $2 trillion is going to go into the short-term lending markets to make sure Treasury bond market goes smoothly. So the Treasury bond market, we got to make sure it goes smoothly, right? How many Treasury bonds you all own? How many mortgage-backed securities? How much commercial paper you got? How about them repos? You into them repos, those credit default swaps? What about them derivatives? So the Federal Reserve is also buying $60 billion worth of treasuries, including now longer-term bonds, $500 billion for new treasuries, $200 billion for new mortgage-backed securities. The Federal Reserve said they're also going to buy assets, including corporate bonds. It's a corporate bailout. They didn't need a bailout. They haven't, sunk. I guess we're preventing it. We're trying to, prevent it. We're predicting. The stock market, the Dow Jones is tanking, so the federal banks buy government bonds, but they said it's from an outside. It doesn't fucking matter. A little tiny flu is going to fuck over the entire financial industry. The Fed banks buy government bonds, T-bills, government notes from various companies. And they're teaching the entire world to do the same shit. During the Great Recession, the Fed bought $85 million in treasuries and mortgage-backed securities every month. So the Federal Reserve banks have shares. They can't be sold. The first one was 300 shareholders. I think 1913 there were 300 shareholders for the Federal Reserve. So could you imagine owning a stock in the Federal Reserve System, the America's Central Bank? I mean, that's some stock you should invest in. Stock in a bank? Banks can't fail. They already got the advantage. Look at Monopoly. Look at every game out there. Banks have unlimited funds. These shares are premium, pristine, fantastic. They're creme de la creme. The Federal Reserve banks and the one big daddy bank of them all, the Federal Reserve Board. But wait, there's one bigger than the Federal Reserve Board. So if the Federal Reserve is the big daddy bank, then the Federal Open Market Committee is the big granddaddy bank. The Federal Open Market Committee. So the Federal Open Market Committee, they manage the money supply of America. They control, if we have a lot of cash or not a lot of cash. They control the monetary policy. Should we expand the U.S. dollar or contract? Jerome Powell, he also chairs the Federal Open Market Committee, and the Federal Open Market Committee meets 8 times per year. Like I said before, there's 5 board members, all the board members of the Fed, which are 5 individuals, plus 5 of the other 12 of the dirty dozen, because you got one federal board and dirty dozen, 12 banks, right? Including Kansas City Bank, which is my bank. Now, for Colorado, so the New York Fed has a permanent seat. So one of the dirty dozen, the New York Fed Bank, plus 4 of the remaining 11 other bank presidents serve on a rotating basis determined by statute. So you got 5 board presidents, 5 Fed board, 5 governors, plus 1 New York Fed president, plus 4 other presidents of the remaining 11 banks on a rotating basis. That's who makes up the Federal Open Market Committee. 5 bank presidents, 5 Fed board members. Now, presidents of the 5 other banks, presidents of the 5 other Fed banks cast their vote. So their vote counts. And the New York Fed particularly are more powerful because they got a permanent position on the Federal Open Market Committee. Now, in mid-March, the Federal Open Market Committee dropped interest rates to near zero. This is huge news just 2 days ago. So the Federal Open Market Committee meets 8 times. They had 2 meetings in March, 2 emergency meetings, March 2nd, March 15th. And they just released those minutes, written record of the meeting yesterday, April 8th, 2020, a month later. Why are we just finding out what happened a month later? Why aren't the Federal Open Market Committee meetings videotaped? All government meetings should have the light of transparency. Federal Reserve meetings, the Federal Open Market Committee, we're going to say what, they're going to write up a bunch of shit a fucking month later, and we're going to have to sift through it to find out what the hell they actually talked about. I'm just tired of government having a bunch of secrets from us. So these executive sessions. So the banks are still paying their stockholders dividends. They aren't lending money out. Instead, they're pulling their assets and buying bonds and stocks, treasury securities, commercial paper repos, credit default swaps, and derivatives. Lots of banks in Europe are freezing dividends just so the banks won't empty out during a bank run. But not Wells Fargo. They're going to pay out lots of fat dividends to their stockholders. So who knows if Wells Fargo is going to have any money, but they'll get, fucking trillion, 80 billion, 80 gazillion dollars. So Wells Fargo can, go ahead and just waste money. That's fine. It's cool. And so that's the Federal Open Market Committee. So now let's go to the regional banks. The Dirty Dozen have this is the hardest one to understand. I have a pretty solid understanding of, the Federal Open Market Committee and the Federal Reserve Board, but I'm a little bit confused about this. I think I got a good handle on it, so I'll just go with this and we'll learn together, okay, America? So you got the Federal Reserve Board of Governors, the 5, Jerome Powell and them, and then you got the Federal Open Market Committee, including the New York Fed and 4 other bank presidents, and now you got the Dirty Dozen. The Dirty Dozen. This is Atlanta Fed, the Boston Fed, Chicago Fed, the Cleveland Fed, the Dallas Fed, the Kansas City Fed, Minneapolis, New York, Philadelphia and Richmond, Virginia, San Francisco, and St. Louis Fed. There's 12 banks, Federal Reserve banks, and most of them provide like other services in their area. Kansas City Fed represents Colorado. The 12 Federal Reserve banks are run by a president, and they're overseen by a 9-member board of directors. So kind of a very typical corporate structure. 9-member board of directors who votes and, approves of the president, and I think can fire the president. Maybe, maybe not, I don't know. But the 9-member board of directors hires and picks the president. And the 12 disciples of the board, the Dirty Dozen, the presidents, so they are chosen by their private sector board of directors, subject to the approval of the federal board in D.C., but they hardly reject what the private sector board of directors want. So the 9-member board of directors pick the presidents of all the 12 Federal Reserve banks. The Bank of the Federal Banks, they are the president for 5 years. So they have 5-year terms. The Federal Reserve Board, the Fed Board, could replace bank presidents if they wanted to, but they never had all 12 bank presidents attend each Federal Open Market Committee meeting, even though 7 of the presidents do not get a vote. Each of the 12 federal banks, the Dirty Dozen, have 9-person board of directors, just to get it in your head. But out of those board of directors, they're actually voted on by 3 different constituent group banks. So there's Class A, Class B, and Class C directors, and then there's division, Class A, Class B directors, and then those directors vote on the directors. No, wait. So the way I understand it, you got 12 bank presidents, they attend each of the meetings. Now, each one of these presidents are picked by the 9-person board of directors. Now, the board of directors, the way that the board of directors are picked, this is a little confusing. So, the Dirty Dozen, they get to elect Class A. There's 3 groups. Okay, so let's just see. Class A and B get to elect the directors to the board. Class C directors represent the public, and they're appointed by the federal board, such as the CEO of Northrop Grumman, a former General Mills chairman, and various university officials. This is the New York Fed. So Class C directors of the New York Fed is Northrop Grumman and other university officials. So there's Class C directors, then Group 1, Group 2, and Group 3. Okay, I think I'm understanding. So you got 3 classes of the 9-person board of directors, so Class A, Class B, and Class C directors, probably 3 of each, right? And then you got Group 1, Group 2, and Group 3, and then the Group 1, 2, and 3 banks, all of those groups vote for a Class A director and a Class B director. Is that clear? So the New York Fed Group 1 for banks with more than $2 billion in capital and surplus like Citibank and Goldman Sachs. So Group 1 is for Citibank and Goldman Sachs, right? Citibank and J.P. Morgan actually owns the New York Fed. The New York Fed Group 2 for $40 million to $2 billion banks, so medium-sized banks, right? You got $2 billion, well, you're a medium-sized bank like SAFRA, National Bank of New York, and Bessemer Trust Company. New York Fed Group 3 are for banks with less than $40 million like the Tioga State Bank and Brown Brothers Harriman National Trust. So you got 3 groups of banks. Group 1, Group 1, 2, and 3 banks all vote for Class A directors and Class B directors, but Class C directors are chosen by the Fed. So 6 of the 9 are decided by the banks, and then 3 of the 9 are decided by the Fed. And they're supposed to represent the public. I never heard about this. Is this an open race? So make it, 9 board of directors choose the president of the bank. That's how it happens. To see who owns the Fed, you got to look into those board of directors, look into those presidents, look into the board members. So, and see who do they represent? Whose interests do they represent? Class A directors for the New York Fed. So we got Class A directors. For the New York Fed is CEO Morgan Stanley, James P. Morgan, the head of Valley National Bank. These directors are elected by the member banks in the district. They used to be able to nominate the president of the bank until Dodd-Frank, which was Mitch McConnell's worst day in office, as the worst day of his political career. Dodd-Frank. He couldn't stop Dodd-Frank from happening. Class B directors are selected to represent the regional economics. They're not bankers, but they're elected by member banks. Can be professors and college presidents, like the executive, P&G, Wayfair. So Class A directors, this is Morgan Stanley, right? Valley National Bank. Class B directors, they're elected by member banks. They're all elected by member banks, and they are not bankers, though. Class B directors are not bankers. They could be anybody, professors, college presidents. Class B directors have a role in nominating their regional Dirty Dozen federal bank president. 2018, the regional federal banks are audited annually by the independent public auditing firm Clinveld Pete Marvick Godeller, or KPMG. KPMG audited the Fed, so they're all audited. So, I think I got a good understanding of this. Class, you got groups 1, 2, and 3. All these are banks. Groups 1, 2, and 3 all vote for Class A and Class B director. Class C directors chosen by the federal board, and Class A and Class B directors. All these have 3 members, probably 9-member boards. 3 Class A, 3 Class B, 3 Class C. And the Class A represents the banks, so 3 of them represent the banks. 3 of them represent, fucking professors and college presidents. And then Class C is supposed to represent the public, nominated by the board. So, yeah, the 9-member board votes for the president. The 9-member board, 3 of them come from the bankers. And then the other 3 are voted on by bankers, right? They're all voted on by the 2 directors, A and B, are voted by the banks. And then C is by the Fed board. So the Fed board controls the directors, the board of directors, and then the banks control, 6 of the 9. So 6 of the 9 represent the banks. Who are they going to vote for president? People that represent the banks, not, anybody with a conscience, nobody who represents America, but only people who says, let's protect the money makers, let's protect the usurers, let's protect the fucking assholes that treat you like a dick every time you walk into a bank. Anyways, that's the political structure of the Fed. Peace!